The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the December 17th, wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a fabulous start of your day. Let's make sure that you and I, that we do all that we can do to get everything we can out of it. Let's always remember what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But what's scheduled, folks, that is real. And I want to thank you for scheduling your time with me. I am here to serve you, and I'm grateful for your presence. That means just give me a call at 877-927-6648. That way you and I, we can go take a look at these stock charts. We can try to identify where price is headed to, any kind of reversal patterns. Of course, internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, I can promise you one thing. Somebody else has got that exact same question. So don't call in for me. Don't call in for yourself. Just simply call in for somebody else. That way, you've taken care of your first random act of kindness out here. Right now, we got the Dow. She's trading up 66 points, trading out at 17,137. S&P up 11 at 1983. Composite up 21 points at 45.68. Russell 2000 up 8 points at 1147. DAX off 34. FTSE down 23. Goldilocks is up a buck. Silver's up 3 pennies. Light sweet crude back 32 pennies. Leading the charge, the upside out here. We got Netflix up about $10, up 3%. Digital River up 46%. We'll take a look at that. Priceline is up $8. Affiliated Manager Group up 3%, up $6. Volcano Corp, well, that's I believe that's a buyout. We'll take a look at it. Pioneer Natural Resources up $5.50 to the downside out here. BE Aerospace off 20%, off $20, down 27%. FedEx, FDX is the ticker symbol. She's got an island reversal. Top out there at all-time highs. Doesn't get more bearish than that on a daily chart out here. We've got Wynn Resorts off $5. UPS down 3. C.H. Robinson down a couple of bucks. Las Vegas Sand down a couple of dollars. Zillow is down a buck 46. Had some requests here inside of the den while my system was being knocked on and off. So I'm going to get to at least 2 of them. Folks, if you're inside the den and you wanted me to take a look at something, please just retype it in. It'll be easier for me to do that. Folks, and for all of our listeners out here, if you haven't had a chance to test drive our Tiger's Den, please come on over to the homepage at TFNN.com. A great group of individuals out there, a great peer group. You know, if you're trying to take your trading to the next level, well, that's a place that you want to be inside our TFNN Tiger's Den. One of the equities that was requested was to take a look at the Spiders S&P Oil and Gas Exploration ETF XOP. Right now, it's trading out at $46. So I pointed this out yesterday. During the last hour. If I could identify or find any reversal signal, bullish reversal signal, I should say, as the markets were moving down yesterday, it came from the energy sector. It actually came from the XLE. Formed a key reversal session after completing A to B equals CD to the downside. That's what the XLE did. Well, if we look at this Spider S&P Oil and Gas Exploration, it also had a key reversal session. What's a key reversal session? Well, folks, it requires 3 things. Number 1, you've got to be in extended condition. Do we have that? Yeah. If we just simply utilize our how about that? I'll get it out. I can't get it out. The RSI, I guess you can't say RRSI, right? The RSI tool out there helps identify where extended market conditions can be. That's above 70. That's below 30. Well, we have that. You can also use A to B equals CD to the downside. You can use a Fibonacci expansion. In the case of the XOP, it had them all. So you got that. Number 2, you got to have the high and low of the current session exceed the prior day's high and low. Number 3, you got to finish just 1 tick One tick, 1 penny, in this case here in the opposite direction. Well, in this case of the XOP, it did that. You're having some additional follow-through here this morning. So where is it that the XOP will trade to, can trade to on any kind of reversal? Well, the first line of resistance, that's pretty easy to identify. That's going to be our gap down that took place here on the trading session of November 28th. That price point is 54.62 to 58.40. That is likely. Now, we can also take a look. That's where our normal area of resistance, our little supply line. That's one tool that we can use. We also can take a look at our retracement. Well, another tool that we've got out here is just simply going to be our daily market profiles for the XOP. That's at 50.16. Old support should become resistance. If you can see it close above 50.16, it failed to act as resistance, and that 54.62, 58.40 becomes your target. If we take a look at another level to be paying attention to, that's going to be your retracement ruler. That's going to be from the most recent high swing point to the low. What we can see here is at $50.03, right at that TAS market profile low, which should become resistance. That's going to be the first place that people are going to check off of this elevator on the ride up. So $50.03. 50.16, expect that to be an area of resistance. If you're coming through there with accelerated volume, wide-ranging bar, what it says to me is it's not going to let folks off of the elevator for very long. It's just going to be a door that opens and closes, and then price moves up to that 0.618 level, which is 54.96, as well as the resistance level from that gap down from November 28th. Had a request to also go take a look at what the weekly chart shows as far as market profile. So as we look at that out here, again, this is the XOP that we are looking at. The level of, the level of resistance, the old support is right at that 54.55, which is really at that daily 54.62 level. So I would have to say 54.62 becomes the number. Now, as long as we've got the weekly chart up on our screen, if by the end of trading on Friday, somehow the intra-session week gets above 47.51, you will have a key reversal session on a weekly chart as well. You'd also have what looks like a bull sash candle that would form as long as it closes above 47.51 out there. No, that happens to be also the key reversal level. So that's what the weekly chart is saying. I believe that the request was also to go ahead and take a look at the VIX index out there. So I'm trying to get to everybody in the den that asked me, and this was during the break between the two shows, as far as things to take a look at out there. So if there was something beyond those two, please go ahead and retype those back into the Tiger's Den. Now, if we look at the VIX index right now, traded at 2381. It's above its 50-day exponential moving average. That's always bearish, meaning that the market should trade lower out here. Yesterday, we saw a VIX index that, from its prior close, had moved up by some 13% or so, more than 13%. That is short-term bullish out here with regard to a bounce in the marketplace. Now, the key here, if you're watching at the top of my screen, I shared this tool with you yesterday. It's a tool you can put up on most charting packages out there. This happens to be the Bollinger Bands out here. Now, a lot of times people use like a 2 standard deviation move on this. This is just a single, a 50 to 1 Bollinger Band out here. The cool thing about this, then you go experiment with tools to see which ones work best for you out here. If the VIX gets back inside 2018, and it could do that, by the end of today's trading session, I think the market's just kind of teetering and trying to understand. I think most people know what to expect with regard to what Janet Yellen's going to say. But look, we're going to take a look at how the market actually responds. If at the end of the trading session, the VIX gets below 2018, well, number one, that'll be more than a 10% decrease in one day. And that says you could see, you could see the market sell off a bit on Thursday or Friday out here. But nonetheless, I would go with the meaning if you get it below 2018, the bottom is in. You might have some testing and so forth, but the short-term bottom, at least the one that takes us into the end of the year. So I hope that helps to identify and answer the questions that folks had inside of our Tigers Den out here. If we go take a look at things that are moving in the marketplace, I mentioned FedEx down 5%, down $9 this morning. I'll just show you this. It was the most ominous pattern inside of any type of stock chart, and that's called an island top reversal. In this case here, it's a big island. I'll show you what that big island looks like by going ahead and removing some of our tools poles out here. We'll just simply add those back on in a bit. And here is your island. I'll just simply go ahead and use a blue line across the bottom here. And what we can see is that gap up that took place. Oh, come on. Work for me. There we go. The gap up that took place on November 21st. We see that FedEx traded higher, then pulled back yesterday. But between that time period of November 21st through yesterday, December 16th, that's what created your island. All-time highs out here. You gap down this morning. What does that say? Well, what it says to me when you get any kind of reversal pattern out here, number one, it could be significant. It could be majorly significant out here. Whether it's going to be or not, I don't know. I just know that it's about as bearish a pattern. It is as bearish a pattern as you can identify. FedEx ought to come down and test the lows out here back from October the 16th. This is Steve Rhodes. This is TFNN. Be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction 0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 58. S&P is up by 9 on the move here this morning. Auspex Pharmaceuticals, ASPX is a ticker symbol, on some positive phase 3 trial out here. And this thing is, maybe a change in business out here. Gapped up this morning, trading out at 50.41. Its actual high out here. Oh, man, come on. Work for me. They're on March the 17th, dollar level. Let me see here. Let me get the volume on this today. Oh, my goodness. What do we got? Oh, I just need to turn it on. That's the problem. If I turn on the volume, that makes it a whole lot easier. Okay, there we go. Just forgot I had some of the tools off this. So already about 3 million shares on this little puppy out here. Moving to the upside. Let's take a look at some other things here that are moving this morning. You got price lines up about $8. No big deal. How about Digital River? Up by 777s. Looks like the slot machine was just pulled inside of Digital River. Up sharply after what? After Microsoft what? Let me see why this is up here. Announced Wednesday morning that it agreed to extend the term of its operations digital distribution agreement with Microsoft to March of 2017. Let's go take a look at Digital River and see what it's trading up to. So Digital River here, let me pull this back. This is the daily chart. This is pretty interesting. This is really interesting. I only wish I had a cursor that would... Let me try to do this. Let me try to reset this. Let's see if I maybe can... I've had so many problems with my system this morning that's what's causing a lot of this. So I'm just doing the best I can to get through this. Let me see if that works. If I reset this way. No. But here's what we can pay attention to on this Digital River chart, at least, is if we take a look, I'm going to go ahead and remove just a couple of tools just so you can see what's going on here. What I want to show you is Digital River looks like this took off right around, wide price spread, accelerated volume, big time out here. And that was back, looks like right around October the 27th or so. I can't tell you which date, but big volume, wide price spread. And what price did here a couple of days ago, December the 12th, it just really came back to that breakout area. Now, Digital River here is really in a consolidation because it fell off the planet on December 8th with 7.3 million shares to the downside versus looks like probably about similar volume to the upside out here. So this thing is going to consolidate between big consolidation range between like the $16 to $26 range out there. Ticker symbol there is DRIB. Also moving to the upside here, you've got Pantry Inc. PTRY is the ticker symbol. That's up a nice 23% here. Looks like they're going to be, they're nearing a deal to be sold. So that's what's moving that. Okay. Let's look at some things moving to the downside. Let's see what BE Aerospace is doing. It's down 27%. Oh, that was a spin-off. Okay, so no reason for us to pay attention to that. So we won't. How about Wynn Resorts out here? Just really trying to help you identify some things. So let's take a look at Wynn Resorts. Let's go see what it is doing out here. It's trading out at 135.95. This thing has been in a downtrend for sure. Let's go see where this is headed to. We're going to take a look at a weekly time frame for Wynn Resorts. Ticker symbol here is WYNN. And let's see what this is pulling back into. I'm going to take a look at retracement levels first. I'm going to try to. Let's see if I get this cursor to work for me. Man. Well, about a minute and a half, then I'll go ahead and reset this system and see if I can get this to work for me. So that being the case, let's come over here. Well, I can probably try a different tab. Let me see how the different tabs are working here. Let's take a look at the long-term charts. There we go. Okay, this is working. I showed this earlier. The monthly chart here for the S&P 500 prices pulled back to a Price is pulled back to its horizontal trading range support level. That's 1971. You're at 1981.52 out here. We were within about $1 of that. Let me take a look at what's going on inside of the composite COMPQ out here. I'll still reset the system when we get back from this this next break out here. Now, in the case of the composite, on its monthly chart, it's below a level of support, which it just broke above last month. So this is really your first test of that area, 46.53. So let's come out here. Let's take a look at where the weekly horizontal trading ranges are. Let's see what shows up on my screen. Monthly, weekly, let's turn those on. These are going to be the green lines that come across. Yep, it is below those levels as well. Let me see here. Now, this on this monthly chart, I don't want to go ahead and put the dailies, but I will switch over to the daily time frame here, and we'll go ahead and we'll put the dailies out here. Just to know what we know about the composites made a 0.382 retracement. Today, an inside day, so that doesn't really provide us with a ton of information out here. And a break that couldn't come any sooner for me as I try to get my system reset. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 49 points, S&P up 8, Composite up 12, Russell 2000 up 360 out here. You know, I would expect to see the market maybe even pull back to even Steven, coming into the 2:30 time frame when we get Janet Yellen on the stump out there. But, I wouldn't expect the market to take off. Let's go take a look at what's going on inside the ETF structures out here. Let's go take a look at the diamonds. DIA, it's up 50 cents. 2 million shares have traded here today. Let's take a look at I've got the weekly chart up on my screen. The weekly chart shows that the diamonds have moved down to the support level of their TAS market profile. That's priced out at 171.04. You're trading at 171.33 as we speak right now. Let's take a look at the daily chart for the diamonds, Dow diamonds here. No reversal. I take that back. The Dow Diamonds actually gapped up just a tad here. So you've got what's called a bull separating line. Let's see. The open of yesterday was 171.27. The open of today, 171.08. Close enough for me in my line of work out there. So actually, you wouldn't even notice. You wouldn't even look at it to know that necessarily is a bullish reversal signal. But it is. What we can say about the diamonds is that if we go from the swing point low to the swing point high, meaning the October lows, we're just really traded at the 0.382 retracement level. Here's the deal. If the market doesn't bounce today, if it doesn't respond well to Janet Yellen, you could expect the diamonds to pull back to about the 166.50 level. Your 0.618 retracement. That's the next level on the way to the downside. If we take a look at the SPY, the SPY up 83 cents, 44 million shares traded so far. Yesterday was a pretty good volume to the downside. It had 259 million shares out there. If we take a look at its retracement from low to high, what we're going to see is we're also going to see that it's at the 0.382 retracement. The exact number is 198.33. You're at 198.71 out here. Break below 198.33 with any kind of conviction says 192.06 would be in the cards. Volume yesterday, as I think I mentioned, 259 million shares. If we take a look at the IWM up 46 cents, up about with 12 million shares here today. Again, all of these, you want to talk about synergy with regard to retracements that are out here, all at the 0.382 retracement. In fact, the IWM a little bit stronger than the SPY, just a tad pull stronger than the SPY and the DIA. You certainly have a reversal signal here. This is a clear bull separating line inside the IWM. It made its way down to the 112.96 level. That's your 0.382 retracement. The actual number was 113.03. You got to love that. Missed it by 7 pennies out there to hit the exact number. But, of course, you and I know we are not looking for exactness out here. Our resistance inside of the IWM right around the 115-ish level. You close above that, you probably go run for the highs at 118.78-ish level. If you don't, if there's a negative response, then we see the IWM probably trade down to the 109.36 area. And then we've got our QQQ ETF as we take a look at the Qs here. Yesterday, volume to the downside of what? 65 million shares. Oh, what's that mean? What does that mean? Are you the believer that volume is accelerating the downside in the Qs means that that's bearish or bullish? Something to think about. What I will tell you is it's bullish. Now, yesterday was the biggest volume that we've seen on the slide since the highs out here. You had volume of 65 million shares out here. If we go ahead and we pull the Qs back, it is the volume pattern of patterns that are out here. When what the Qs do is they make a bottom with volume. Now, just as an example, we know that October 15th was the low inside the market. Now, what kind of volume do we have there? 108 million shares, right? Makes a low with volume out there. I just have to assume that at this day and age, the way that it works is because the Qs are used by hedge funds to manage their portfolio, that's why we're seeing this volume behavior inside of the Qs. The bottom before that was on August the 6th, so right around that time frame. So we could use August 1st, 60 million shares. We saw the market kind of gravitate and move sideways out there, so that was the bigger volume day. 60 million shares, August the 1st. What did we have yesterday? 65 million shares. Something to think about. Come back and take a look at the low put in on April the 15th. April 15th, 84 million shares. What took place a couple days before that? 93 million shares out here. So these high volume washout days inside of the QQQ ETF. And guess what? Those are bullish, not bearish. And I know that it is totally opposite of what you might think out there. I wouldn't have believed it until I identified it myself. And then it was kind of like, it was not just something to think about. That's the way that this works. Go back to February 3rd, 2014. That was an important low. 65 million shares to the downside. Now the market moved sideways for a couple days. Actually made a slightly lower low. A test of that was on February the 5th with 42 million shares out there. That marked at least a significant low for the market to go ahead and move to the upside. See, we can do this over and over and over and over again. How about October the 9th? October the 9th, as the market was made, this October the 9th, 2013, market moved down, just like we're taking a look at now. How many shares? 65 million, 64.5 million to be exact. So was yesterday's move was 65 million? Was that the end of it? If we see some bullish reversal signals, the market move higher? Yeah. It was. It's telling you that that the bottom is very likely, and at least it has been in the past. Go back June 24, 2013, as the market was moving down. I'll go back a couple of days before that. I'll go back to June 20th, because the low that was formed on June 24th had 41 million shares. But the low, or the market had moved lower on June 20th, had 61 million shares out there. Okay, that's not good enough for you. You want to go back even further. Go back to April 18, 2013, as the market was making a low out there, and guess what? 57 million shares out there. So the question is, just taking a look at that, you yourself go back and do the work out there. The Qs actually gave us a pretty big signal yesterday. Can the markets move lower? God, yes, they can. Do we have any reversal signal inside of the Qs? No, we don't. But the type of volume, the volume pattern that we see here inside of the Qs yesterday, which is very similar to other bottoms that we have seen inside the marketplace, if it forms a bottom, don't be surprised. It only works really in the Qs. I haven't found it to work consistently like that in the SPYs. Maybe it works. I haven't really spent much time lately looking at it. When I originally identified this pattern behavior out there, it was really consistently working inside the QQQ ETF out there. So that's what's going on inside of that. We'll just leave it there, and we'll come back and look. Here's the key of any pattern that's out there. I don't care whether it's a Gartley pattern, whether it's an A to B equals CD pattern, whether it's a Bollinger Band pattern, whether it's a Chapman Wave pattern, whatever it is, the market's not going to stop moving higher until there's a bearish reversal candle. Otherwise, it just keeps moving up to the next level. The market's not going to stop moving lower until there's a bullish reversal signal out here. So what we've got is a pattern setup with regard to yesterday's volume. We don't have the bottom yet. We get that when we see a bullish reversal signal. That could happen today. If we don't see that, market moves lower, and we just continue to look for those higher volume moves or some type of bullish reversal candle. The market is always communicating to you and I. We just have to learn how the market communicates to us. And that means you really need to understand how to utilize those Japanese candlesticks out there. Yesterday, I had Jason Keck from Traders Formula with us, who's created this very cool co-op of tools out here that basically the concept behind it is take existing patterns that great traders have made and identify tools I see. Identify things that they didn't see in order to be able to make it better. It's the way that you and I live life each and every day out there. And that's the cool thing about the cooperative trading tools that they have available on their website out here. And that's really all that I'm doing. So volume, there's always new information that's being provided to us. If you want to learn Japanese candlestick charting and just the ones, how to use them, how to put those together with your patterns, you get the holiday season, right? Happy Hanukkah to all those folks that are celebrating. You got Christmas that is coming up very soon out here. People are trying to buy you gifts out there. What better gift than the gift of education? That's a gift that keeps on giving back out there. So come on over to the homepage at TFNN.com. You can see my name out there. You can sign up in the carousel on the left-hand side for my 7-week trading course out there. It's information that it's basically taking decades of information and condensing it down into a 7-week trading program, teaching you only what it is that you need to know out there. So you can do a lot of trial and error stuff, or you can, the fastest way to learn, of course, is to just simply, master what somebody else has done. And so I'm taking the work of masters, only I've improved upon all of that work out there. So come on over to the homepage at TFNN.com. Also, moving in the marketplace here, so we've taken a look at the ETF structures out here. Gold's now back $1.80. Gold is giving us some bearish signals out here. Unfortunately, if we take a look at different trend lines, I got to put those back on my system since I restarted. We'll just take a look at this trend line here. That's coming off of the July 10th high. Of course, that's that little green line coming across my screen out here. This is a daily chart here. So that just shows, whoops, come on. That trend here, we saw gold get above that level. We're now back below it. That's one trend line. I'll put the secondary trend line on here because both of them have been broken to the downside. So both those green lines, both of those are trend lines. And that does not bode well for gold. What does that say for gold? It says probably 1181. Is a price where it tries to move to. A break below 1181, and what we're looking at is 1152.70, probably a test of that low from December 1st out there at 1141.70. That's what's going on inside of Goldilocks. We haven't looked at the currency market out here. Let's go do that. Let's look at the euro, Japanese yen. Of course, she tracks the U.S. stock market better than any other currency pair out here. Not giving any cuts. The daily chart that we're looking at, certainly no bullish reversal signal on it as we speak right now. So little divergence between the market trading higher and this currency pair not confirming that. If we take a look at the euro U.S. dollar, remember I've got a 15-minute delay on this chart. What we know about the euro is that it's broken a recent trend line. If we take a look at that trend line here, that's going to come off of the highs here from October 15th. So there's your break of the trend. Looks like what we're going to see here is the euro come back and test that area. If it tests it, if it holds, it's just the euro trying to really form some kind of a bottom out here. Why would the euro be forming a bottom? Why would it not be trashed? Or why is the trash over trashed? It's because somehow people believe Mario Draghi speak out there. It is amazing because if you actually go take a look at the balance sheet, you can see he's nothing but speak. He's nothing but speak out there. In any event, what we can say right now about the euro is that it's broken its trend line. If we take a look at the Japanese yen, trading up just slightly here. The Japanese yen, we know, made a huge move. The 1 to 2 A to B equals CD to the upside. It has backed off. If we take a look at back off areas, let me go ahead and get rid of the A to B equals CD pattern. It will come off of the session from October 15th. That's the low we're going to use to the December 18th high. Has not, just like the euro Japanese yen, it has not made a 0.3. Well, it did make the 0.382 retracement. 115.49 was the number. It got down to 115.57. That was yesterday. If we take a look at the Great British Pound, the Great British Pound was trying to continues to try to form a bottom out here, but still just sideways action. That key is going to be that hammer candle from November the 14th out here, moving sideways. Let's look at some things here. Actually moving in the market. Let's go take a look at some of the mining equities. So you got gold. Gold's now up $4 out here. Not a big deal, though. Silver's up 11 pennies. Those trend lines are going to be key. But let's go see what the mining stocks are communicating to us. So let's look at Rand Gold. GOLD is the ticker symbol. You got Rand Gold yesterday, just kind of an inside bar, says the trend continues. Yesterday's high was 64.19. Today's high 64.16. Another inside bar inside of Rand Gold, not providing providing us with a ton of information out there other than the information of, hey, Inside Bar says the trend I just came from continues. Same thing inside of Gold Corp as we take a look at it today. It's up 37 pennies. Does that mean we have found a bottom? Not so fast. In fact, Gold Corp is likely going to test that October 31st low. That price point is $17.01. Yesterday, you were down at a price point of $17.06 with 12 million shares versus 20 million shares. So it is coming in light out there, but you have not tested the bottom of that swing point. If we look at Barrick Gold, up 21 pennies as we speak. Barrick Gold, they're all doing really the same kind of thing out here. In the case of Barrick Gold, the thing that it's doing different than Gold Corp is it's below. It's a November 5th swing point low. That had 26 million shares, and you got below it with 25 million shares, both yesterday and the day before out there. Today, just an inside trading session out here. So that does not bode well. Either of those two do not bode well for the GDX as we speak right now. We'll take a look at one more equity. Let's look at FCX, Freeport, McMoran. Of course, we know that this too, if we're going to trade this, what you want to do is you want to time this with the Aussie dollar. If we put the Aussie dollar on here, you will see that Freeport McMoran is almost like trading the currency. As we speak right now, we put this on a longer-term chart. Just look for some patterns, meaning a weekly chart out here. What do we have? You have Freeport McMoran. It is below its weekly swing point, well below that from June of 2013. This is Steve Rhodes. This is TFNN. Dow's up 92 points. S&P is up 14. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get your Ultimate Tuesday and provide subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term inventor of Emmy-winning animation products for TV and Hollywood that propel trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN. TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the likes of which have never been seen before for every market and every time frame. Yes, folks, the trend is your friend unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back. Dow's up 83, S&P is up 12, Composite up 17. Let's take a look at let's go take a look at the energy sector. The XLE turning in a key reversal session yesterday at the completion of a 1-to-1 A to B equals CD to the downside. But if we're going to look at that really means let's go look at the ExxonMobil, Schlumberger, Chevron. So let's take a look at ExxonMobil first. Now, what do we know about ExxonMobil? Number one had let's see, what did the open yesterday? The open was 86.38 and the close was 86.41. Okay, so you had a key reversal session yesterday. You wouldn't really notice that if you looked at the candle, would you? You would now because you know I can show you how to identify those. Number one, got to come from an overbought or oversold condition. ExxonMobil most certainly did that, an extended condition, overbought, oversold. Right? Number two, you got to exceed the prior day's high and low. ExxonMobil most certainly did that. Yesterday's low was 86.41. 86.19. The prior day low, 86.50. The prior day high, 88.60. Yesterday's high, 89.20. And you got to close just 1 penny. 1 penny. That's all you really need in the opposite direction of the potential new trend out here. So you got a key reversal session. In this case here, what we also had inside of ExxonMobil, looks like to me, just like the XLE, here's your small A to B equals C to the downside. Your A point, your B point, your C point out here. So it does a 1.27 to A to B equals CD to the down. This morning, you've got a reversal pattern out here. You've got a combination of different reversal patterns that you could have here. But let's just go with the bull separating line out here. Inside of ExxonMobil. Now, what we also can see inside ExxonMobil on a daily basis, it tested a swing point from October 15th. Now, that had 25 million shares, 24.7 to be exact. Price came down and tested with 24.5, 21.3, and rejected. So there's your test with lighter volume. That's on the trading session. So it was 2 days ago, December the 15th. You had a test of that swing point with lighter volume and a rejection of that area. And then yesterday, another test, 26 million shares. So volume-wise, okay, maybe not out of the woods, but you did have a key reversal session inside of ExxonMobil. So where does it move to? Well, if this is a reversal of fortune out here inside ExxonMobil, I think there's a couple different things that we can do. Number one, we can just take just a very short-term trend line out here. The one that comes off of your A to, oops, I just have to actually grab the tool. There's one trend line that you can draw. So ExxonMobil, if it's going to, let's do it right about there. What's that? Takes you right up to 84. So that's likely going to be where we would see ExxonMobil trade to. Let's go over and take a look at the weekly chart here for Exxon. Let's go see what was going on at that swing point. So the weekly swing point that it is testing was the week that ended. It was the week that began October 13th. There was 105 million shares. We're Wednesday, right? We're Wednesday. Now we're into the trading session. 105 million shares. So far, we've got 52 million shares for the week. Last week was lighter volume, 99 million shares versus 105. So you're testing a weekly swing point, it looks like, with lighter volume. And you were also testing, how about this? You were also testing the high of the swing point from the week that began in October of 2013. Now, that had some 70 million shares out there, but nonetheless, we have rejected that level. So any close this week above 86.95 could bode pretty well for ExxonMobil, at least for a bounce out there. So, folks, stay tuned. Our man Basil Chapman is up next. And as we do every Wednesday, after Basil, we go to our man Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 3 to 5. And thanks so much for joining me, folks. I will be off tomorrow, but somebody will be sitting in the captain's seat, and I'll be back with you on Friday morning here, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.